Hello everyone, welcome back to another video. Today I'm going to be showing you my secret ICT strategy that I've been using to trade US30 and other indices this week. In the last 2 weeks, in fact, I have had absolutely no losses in my trading and it's been really great. I've made some really good profits. I've been sending these trades to my private group as well. So I've actually had quite a few people ask me, why have I been focusing on indices lately, and in particular US30? Now, it's a simple reason. I only have to be on the chart for about 2 hours every day. And in fact, it seems that a lot of people like that. All of the people in the private group prefer it because I'm trading generally in South Africa between 4:30 and 6:30 every day in the afternoon. Now, this allows me to just look at the charts for a specific small amount of time. And this is quite convenient, to be honest. The reason I'm able to do this is because US30 moves quite fast and it allows me to capture big moves in that small 1 to 2 hour period. So basically the strategy that I use is similar to the other strategies that I've used to trade NASDAQ and some Forex pairs as well. It's all based on ICT's principles. However, I have created a more systematic and controlled approach to this. It's less based on experience in the market and more based on testing and many hours of going back in data and collecting more information on trades that I've taken with past data. So without further ado, let me hop into the computer and show you exactly how I trade this ICT based strategy with US30. Right, so there's a number of different ways that you could trade the Dow Jones US30 when it comes to ICT concepts. However, the way that I'm going to show you now is one of my favorite methods that works really consistently, right? So basically, let's go back in time, okay? So this green area is basically the London session until the end of New York session. So what you want to do is, of the previous day, you want to mark out the highs, okay? And you want to mark out the low of the previous day. Now these dotted lines show the beginning and the end of the previous day. I use this indicator here, ICT midnight NY and GMT. You'll find that here under indicators. Okay, so you mark out the previous day's high, okay, and the previous day's low. So this is the highest point of yesterday. Between these lines, this is the highest it went, and this is the lowest it went between these dotted lines, okay? Make sure that your time zone is set to your local current time. It doesn't actually matter. This already picks up New York's time, not the time that is set here. So I'm going to play price forward. Okay, hang on. Price liquidates this level, the high, and that's what we would do. We would set an alert here at this high, okay, and then we would wait for it to violate. So it violates on the 15-minute, and we start looking for these violations on the 15-minute, right? As soon as it breaks, we drop down to the 3-minute. And in fact, sometimes I drop down to the 1-minute. And we look for a break of swing structure. Now you can see here that price went up, down, up, broke this, which confirms this low to us. So what we would look for is a break of this low. We have a break of the low, and now we look for the fair value gap. In this case, the fair value gap is right here. Okay, why? So I get asked about fair value gaps a lot. A fair value gap is the relationship between the 3 most recent candles. So price breaks, okay? Where price breaks, we then look back. The candle that broke is one candle before it, okay, next candle, next candle. Now, is there a gap between this candle, this third candle back, and this most recent candle? Yes, there is. Here's the wick of this candle. This is the lowest this candle went, and this is the highest this candle went. Okay, this is the highest the most recent candle went. And this is the candle, the third candle back. This is the lowest it went. So naturally our gap is in this area, because why? Price has not returned to this area again. So what we do is we place our limit at the start of the fair value gap. Just be safe, target the high. Use the high as your stop loss. Okay, let's see if we get put into this position. And in some cases we do, some cases we don't. So in this case we did not get tagged. Okay, so had we been tagged, we would have targeted this low for our first target, and then obviously we would target the low, right? So now this is now the area we're looking at for our next trade. So we would set our alert here, okay, and then we would look for a reaction. So let's see what happens. Price continues. Okay, so we get a violation of this level, and now we're looking for a break of the high. How do we know that this is the high, right? We look, price came down, came back up, and came back down. This was confirmed when this was broken, when this low was broken. And so that is the high. So now we're looking for that area to be broken by price. We now have a new level here. We now have a new level here. We now have a new level here. Why do I keep changing the level? Because look, price pulls back. Price pulls back and then breaks structure. Okay, and now the level is here. Okay. Okay, so this is called a displacement. Now this displacement is what gives me a good confluence to say there is a momentum shift. The other confluence is that this high was taken here. Okay, there was a change of character. Now why was it a change of character? We had a pullback, like I just showed you. We had a pullback, like so. Okay, and a break of this low. Let me make this darker. Okay, we had this pullback, and then we broke the low that created that pullback. Okay, then the higher high was broken now. So this is our change of character. Okay, that's the abbreviation for it. Okay, then we look for our fair value gap. Now again we look back. So we got 1, 2, 3. This is our third candle. Now the value gap will be the highest and the lowest point, which will be, this is the lowest point and this is the highest point. Okay, and the gap is that. However, that cannot be our gap. Why? Because we have to look at the most extreme, so the furthest one away from where structure was broken. So the break of structure happens. We need to look for the one that is the furthest away from where the break of structure happens. That is my rules. Okay, so if we keep going back, we'll see there's a gap here. Okay, but is it the furthest one away? Nope, it's not. We look back again, and this is the furthest fair value gap on the extremity. So we take our long position at this point. Okay, stop loss below, and we wait to get triggered in. We get triggered in, and just like that, okay, whoops, there is a reaction. Now what we would do is take partials and go break even at this point right here. And there we go, break even and take partials. I would then be looking for this as my full take profit. Why? This was where we had a pullback. See, it pulled back and then created this area here. Let's see if it reaches our take profit. And there you go. Okay, price at 6.5 risk reward. All right. So we got 6.5 risk reward. We've got this one, which was a missed trade. Okay. Did not come and tag us in. Right. So now we go back to the 15-minute and we look back, right? And now I'm also showing you guys a bit of back testing as well. This is exactly how I test and sort of like hone my skills as a trader. I go back into price and I just replay price action. Okay. Now we wouldn't be looking for trades here because it's like 6 a.m. in the morning, 2:30 in the morning actually, which is just way too early. Now London session is open, so we would be looking for a break of this structure. I would also be looking at a break of this structure potentially because it is a significant swing structure. All right. So price is hunting the lows. Right. Let's hop down to the 1 minute. Okay. Now we're going to look for. Okay. So here we've got our swing. Okay, break, and now we're looking for a break of this area. We get our break, now we look for a fair value gap, which will be at this point here. Right. And we'll place our stop loss a bit below. So where we're going to look to take profit now, you can see as well that there are fair value gaps up here, okay? And there's actually one right here. So I will take profit there's a fair value gap right here. So my first TP will be just here, okay? And full TP will be at the top of the zone, okay? So we tagged in. And TP1 is hit for 1.5R. Now we're targeting the full area. Okay, so we got our 1.5R, right? $1.5R. Now, what did price do? It came and broke the lows again. So guess what? It was a pullback. So this is your pullback, okay? Okay, and now, in fact, I would be looking at this here. So we want to look for a break of this level, okay? Because we've got a change of character right here, okay? Prices come down, broken structure, and reacted, okay, and broken the structure. So now this would confirm to me that price is looking to switch up again. Okay, do we get it? It must be also, you have to look at it. Now it broke with a wick. I'm not necessarily convinced. Okay, now it's a solid break. So now I would be placing my entry here at the fair value gap. Again, you look where price broke, okay? Let me get rid of this. Price broke the swing and we look back, okay? Is there a gap? This is the gap. Why? Here's the lowest point of this candle and here's the highest point of the previous candle. And this is the gap in the middle. So I would target the highs here for my first take profit. Okay, so now we take some partials and go break even. I would then take full TP at this high, okay? So now the trader is at break even and we have taken partials on the trade. Right. And our full target is hit for 2.75 R. And when I say R, okay, that's risk, okay? What that means is it's the multiplication of what you've risked. So if you risk $100, here I would have made $275. Here I would have made $150. If I risk $1,000, $2,700, $1,500, and here $6,500. Okay, so that's it, guys. That is how I recommend you trade the strategy that I have. I've backtested a full 2 days worth of price action in front of you guys. We made 6.5, 2.7, so that is about 9, so about 10 R. So here we could have passed an FTMO challenge in 2 days, guys. Right, so what I recommend, guys, is that you go and backtest that strategy as much as you can. Collect data, okay? Create a spreadsheet of your entries, exits, take screenshots of whenever you enter and whenever you exit, and that way you learn what the market conditions does, and you can filter out your trades even further so that you avoid losses in the future, okay? The other thing as well, guys, we are doing a giveaway. So if you want a $10,000 account with my Forex funds, I'm giving away 2 of them. All you need to do is follow and subscribe down below. So guys, that's it from me. I hope to see you in my next video. Thank you so much for all of the support that I've been receiving so far with this channel. Thanks for watching, guys. See you in the next video.